morning. I'm Pete Seyler, and this is Markets in a Minute for the week of November 10th. Markets did take a step back last week following a steady run-up for much of the last few months. This was a result of a number of factors that all intersected last week, including the ongoing government shutdown, as well as growing concerns over valuations in the tech sector. Starting with government, we've now entered unprecedented territory as it relates to the government shutdown, with neither side of the aisle looking like they're willing to budge as of Friday. The latest impact has been on the U.S. airline sector, with an announcement last week that airline capacity would be cut by as much as 10%, causing widespread cancellations and delays across the nation's major airports. In addition, the shutdown continues to delay critical economic data that the Fed heavily relies on for their monetary policy decisions. This includes key inflation reports as well as unemployment and payrolls data. This said, though, in terms of economic data, we did continue to receive reports from non-government agencies such as ADP and Challenger. The Challenger job cuts data that was released on Thursday was less than encouraging. According to the outplacement firm, companies laid off more than 150,000 employees in October, the most since 2003. This was largely the result of job losses in the tech and warehousing sectors where AI adoptions do appear to be displacing workers. This is a concern that's been brought up more frequently over the last few months, and now appears that in the data that this is potentially proving these fears correct. Now back to equity markets. U.S. stocks retreated from recent highs, with the Nasdaq posting one of its worst weeks since the tariff-fueled meltdown in April. This was largely driven by high valuation tech and AI-related names, as investors appear to be heeding the words of many high-profile names on Wall Street, and even Chairman Powell, that equity markets are indeed overvalued. Taking Palantir as a prime example, from the start of the year to its recent high, the stock rose by nearly 175%, while trading at a forward PE of more than 300 times on October 30th. The stock ended the week more than 15% below that high watermark. NVIDIA saw a similar pattern, falling by more than 10% from a peak valuation of just over 45 times forward earnings. With that, thanks for watching this edition of Markets in a Minute. If you enjoyed the video, please like, share, and subscribe. Hope you have a great week.